Welcome to Illuminati Silver. We tell you the truth about silver. Today is Wednesday, the 29th of December 2021. And yesterday we published a video entitled, Will Gold Outperform 2021 in 2022? And the day before, is silver heading for $30 or $17 next? And we've placed links to both of these below in case you haven't had an opportunity to watch them. Now, these two videos are part of a series of videos over the Christmas and New Year period where we highlight various institutions and individuals' views as to where they see gold and silver heading this coming year. We've already given our forecast for gold and silver prices to the end of 2021, and unless something major in the geopolitical or financial field raises its head between now and the 2nd of January, we have no desire or reason to alter our forecasts. Today, though, we shall look at a private investor and commentator who believes that silver's bottom at nearly $21, seen earlier this year, is already in, and that we can expect silver to trade between $21.50 and $26.50 during the early half of 2022. So with that in mind, let's take a look. Promising outlook for silver in 2022 published by stocknews.com. Author Taylor Dart. Now, before we look at this article, let's find out who Taylor Dart is. And he has over 10 years of experience in active and passive investing, specializing in mid-cap growth stocks, as well as the precious metals sector. He's been writing on Seeking Alpha for 4 years and managing his own portfolio since 2008. His main focus is on growth stocks outperforming the market and their peers. In addition to looking at the fundamentals, he uses different timing models for industry groups and scans upwards of 2,000 stocks daily to identify the best fundamental opportunities with the timeliest technical setups. Taylor is a huge proponent of trend following and the turtles who enjoyed compound annual growth rates of over 50% per year. Now, this article was written yesterday, or at least published yesterday. So let's take a look. It's been a frustrating year for investors in the precious metal space, with the price of gold and silver being two of the only asset classes that are negative for the year. This is especially frustrating for investors in silver who didn't take profits into the proclaimed silver squeeze earlier this year, which sent silver prices soaring overnight. But those gains were given up almost immediately. Despite the pathetic year-to-date return, past performance is not indicative of future performance. In fact, the metals sector typically bottoms just when the majority have finally thrown in the towel, and it's seen its worst performance in years on a trailing one-year basis. This suggests that the bottom is likely already in for silver at $21 an ounce. Let's take a closer look below. As the chart above shows, silver has been very volatile in 2021, and we'll enlarge the picture so you can see this volatility. Trading in a range of $21 to $30 an ounce, and finding itself at the bottom of this range to close out the year. Not surprisingly, this weak performance has put a major dent in bullish sentiment for silver, with sentiment dropping to a reading of 12% bulls earlier this month. This suggests that there was one market participant that was bullish for every 6 that were bearish in the first week of December. These extremes typically provide the conditions for durable bottoms. As the chart above shows, and we look at this chart here, we have only seen readings this low on 3 occasions in the past 3 years. March 2020, September 21, and May 19. In all these instances, silver rallied at least 15% over the following 6 months, with a median forward 6-month return above 25% in these 3 instances, and its worst return coming in at 17%. Based on this recent reading of extreme pessimism occurring at 21.40, this would suggest that silver could trade above $25 an ounce before May if this played out like the weakest of the past 3 signals, and would rally above $26.50 if it traded in line with the median signal. Now he's pointing this out in spite of saying past performance is no indication of future performance, and then gives you an example of past performance and says, if it follows through, this is what we get. But it is a fair, to be totally open, it is a fair analysis, in as much as it is saying from a chartist point of view, if the trend continues, this is where the market could go. It's ignoring, to some degree, basic fundamentals of supply and demand, but it is giving you an indication as to trends. Some traders and investors would be quick to point out that there's no need to go bottom fishing for any asset class, and I would argue that this is a very fair point. Typically, catching a falling knife in the commodity space does not play out well, and we often see commodities fall much further than expected. However, looking at a long-term picture of silver below, we'll have a look at that in a second, an apparent falling knife on the daily chart is actually a violent decline to a major support level on the yearly chart. This points to time frame conflict, with a larger time frame holding much more weight. As shown above, silver has simply backtested a multi-year breakout level with its decline near $21. And this is where roughly that box is in line with. Going down to just above 30 now, I think it's about 13.50. And despite the 2 major corrections we've seen this year, silver has held the majority of its 2020 gains. Given its resiliency when defending its breakout level 21.50, I believe investors should be open-minded to the fact that we just saw a double bottom on the daily chart and that prices are heading higher from here. So what's the best course of action? Based on silver's short-term trading range of 21.50 to 26.50, the most attractive trade from a reward-risk standpoint is buying below 22.25 and taking profits on any rallies above 25.75. Now, those of us who actually buy the physical know that this isn't practical, because by the time you take in buyer's premium, dealer's margins, and in UK VAT, it's not going to give you enough of a profit in which to do this. So this is essentially for trading. This is because traders have a 5-to-1 reward risk setup, buying below 22.25 an ounce, with less than $1 to support and $4 in upside to potential resistance. The other attractive way to play the silver price is through takeover targets like Go Gold Resources, which looks like it has a high likelihood of being acquired if it continues to make new discoveries at its Los Ricos project. To summarize, I remain long-term bullish on silver as long as $21 an ounce holds. And my favorite buy the dip candidate is Go Gold Resources, a Mexican silver miner with 2 large development projects in Jalisco, Mexico. For now, I remain long gold and GLD Gold GF, given that silver is outside its low-risk buy zone. But I would consider starting a position in silver below $22.25 an ounce. Disclaimer, Taylor Dart is not a registered investment advisor or financial planner, and this writing is for informational purposes only. That's the end of this article. We'll comment on it now. Well, we can certainly see where Taylor stands, and what is interesting is the relatively small margin between his predictive silver's high and low for the first half of 2022, about $5. Now, we shall in early January give our forecasts for the year, but before then we'll publish other commentators' views. But at this moment, we would like to hear your views on what Taylor's had to say and whether you agree with him or not. Meanwhile, thank you for listening. Please give us a thumbs up, but more importantly, subscribe and press the bell sign so that you can have notification of these videos as and when they are published. Illuminati silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.